here at the OECD Auditorium, and good morning and afternoon to everyone online. Welcome to the OECD's Green Talk Live on the topic of financing climate futures, rethinking infrastructure. My name is Anthony Cox and I'm the Deputy Director in the OECD Environment Directorate. I'm also responsible for overseeing the project on financing climate futures. So the timing of this Green Talk is really, really good. COP24 starts next week in Katowice in Poland, and the topic of finance will, as always, be a major theme in the negotiations and in the meeting rooms and in the hallways of the conference centre. Underpinning the discussions is a recognition that getting the infrastructure right is absolutely essential if we are to meet the targets and the goals of the Paris Agreement. And the issue of finance and infrastructure is at the core of the joint OECD, World Bank and UN Environment report, Financing Climate Futures, Rethinking Infrastructure, which was officially launched yesterday in the margins of the G20 summit in Buenos Aires in Argentina. That report provides a roadmap or an action plan for governments in making the kind of transformation that is needed to ensure a low-emission, resilient future for societies around the world. So we have a great panel here today to present the key findings from the report and to kick off our discussions. And I'll just introduce them briefly. Starting from my left, we have Virginie Marchal, who is a Senior Policy Advisor in the Environment Directorate, and Rodolfo Lacy, who is the Director for the Environment Directorate here at OECD. Dorothée Allain-Dupré, who is with the Centre for Entrepreneurship, SMEs, Regions and Cities in the OECD, and Resharper, who is the Executive Director of the 2050 Pathways Platform. Now, the rules of the game today are that the presenters and the discussants will have about 25 minutes to, first of all, present the key messages and then kick off our discussions. And afterwards, there'll be roughly half an hour for questions. For those of you online today, you can send questions at any time to questions moderator in the chat section of your WebEx screen, and I will convey them to the panelists. This is your chance to dig deeper into the issue and ask the really hard questions. So without further ado, I'll hand the microphone over to Rodolfo to provide us with some welcome remarks. Rodolfo.
Thank you very much, Anthony. Good afternoon, everybody. Well, as mentioned, next week climate negotiations will meet in Katowice, and they will face a great challenge in finalizing the Paris Rule Book for how to achieve our global climate goals. And they will be keenly aware of the urgent need for ambitious collective action. Well, the IPCC recent special report on 1.5 degrees of warming shows that without appropriate and sufficient climate action, we will likely to reach 1.5 degrees of warming compared to pre-industrial levels by as early as 2030. That's barely 12 years away. This means rapid and far-reaching transitions at an unprecedented scale in our energy, land, urban, infrastructure, and industrial systems. Today, we are here to present the results of the Financing Climate Futures Initiative. This initiative is special because it is a joint effort by three of the world's largest international organizations, the OECD, the UN Environment, and the World Bank Group, with support from the German Federal Ministry for the Environment. The Financing Climate Futures Rethinking Infrastructure report is this, which was launched just yesterday in Buenos Aires at the G20 summit, is unique and powerful in that, for the first time, our organizations have come together to provide a roadmap for governments on how to move away from incremental progress on climate. Of the hundreds of policy levers and actions that governments can take, it prioritizes 6 transformative areas and 20 actions on planning, innovation, public budgeting, private finance, development finance, and cities that we believe will truly make a difference. Well, let me please recognize the great effort made by more than 118 experts of multiple nationalities and disciplines to produce this report. Some of them are here in the audience. And with that, I would like to thank you all for attending today, and I look forward to the discussions to follow. Thank you very much.
Thank you, Rodolfo. And that provides very good context for the presentation of the key messages that Virginie will now undertake. Before she does that, just let me add a few more a few more thoughts around the framing for the report. The premise for the report was that governments tend to be very, very good at incremental policy change. They are very good at tweaking carbon prices. They are very good at shaving a few points off fossil fuel subsidies. They are very good at introducing R&D support around renewable energy. But governments are less good at the kind of transformational changes that are necessary if we are to radically shift our economies towards low emission resilient futures. If we look out to 2050 and see what kind of societies we will be living in, what kind of infrastructures will be needed, what kind of cities we are living in, what kind of transport systems we have. We look at that and then work backwards to our systems today. Are they fit for the future? Are our infrastructure, planning, investment, infrastructure systems fit for the future? The answer would be a resounding no. And that is where we came in with this report. We looked at what kind of transformative actions can governments take now to make sure that we can overcome the organisational bias, the institutional inertia, and the vested interests that will make a difference in the medium to longer term. As Rodolfo said, we identified out of all the hundreds of possible policy levers that governments have at their disposal, what are the key ones that are going to make a difference? And now I'm going to turn to Virginie, who will run us through how we are going to how we have laid this out for the future. Virginie, the floor is yours.
Thank you very much, Anthony, and thank you very much, Rodolfo. It's my great pleasure to be with you this afternoon. I have a huge responsibility because the messages I'm going to present are not just the OECD telling to other people what they think are the good things to do should we want to achieve the Paris Agreement's goal, but it's really the common visions and messages of three very powerful organizations and international organizations. It's the OECD, the UN Environment, and the World Bank Group trying to help governments how to achieve really the transformation that is needed for the Paris Agreement. As Anthony and Rodolfo mentioned, we face a huge challenge. We need rapid and far-reaching transformations should we want to achieve our climate goals and our development goals. The IPCC report 1.5 that was released a couple of months ago reminded us of what the trajectory of emissions should be should we want to achieve these targets. Emissions should reduce by 45% in 2030, which is in 12 years. And emissions should go to net zero emissions by the second half of the century. If we compare that to current trends in terms of emissions, we are way off track. I mean, in the past 4 years, there's been a stagnation of greenhouse gas emissions despite the really huge efforts from governments to put prices on carbons and to implement climate policies. And what we've seen as well last year is an increase actually in greenhouse gas emissions driven by growth. So really, how can we help governments decoupling those two trends and meeting the challenges? What we found is that infrastructure are at the center of the climate agenda. Why is that? The first thing is that infrastructure have a huge carbon lock-in power. The infrastructure we'll build in the next 5 to 10 years will lock in emissions for the decades to come. And today, infrastructure systems already represent 60% of the emissions. So we need to get the infrastructure system right for climate. But it's not only a climate agenda, as I said, it's a development and well-being agenda. If we look at an investment in infrastructure today, there's a huge investment gap should we want to achieve the climate and development goals. The OECD estimate that we need to invest around $6.3 and $6.9 trillion per year should we want to achieve those goals. Today, we estimate, with the scarce number we have, that we're investing $4 trillion on average. So we need to fill this gap. And actually, the climate agenda is a huge opportunity to get this right. The agenda of infrastructure and climate is not about building and investing more. It's about investing better. We need to scale up, but we also need to shift investments to the projects that will really have an impact, to low emissions energy systems, low emission transport, and sustainable land usage. So as Anthony mentioned, we gathered the three organizations to really think about how can we help governments move away from those incremental progress to really deliver the transformation that is needed. Many organizations and countries are taking approaches that are based on sectors and are taking measures and policies in transport, in energy, and it's important. But what we realize is that if we really want to overcome this bias that we have in our economies towards fossil fuel energies, we need to look at the policy areas that are underpinning decisions across those sectors and across those areas. And we identified 6 transformative areas: planning, innovation, public budgeting, resetting financial systems, rethinking development finance, and empowering cities. So I'm going to go quickly through those different areas and share with you the 20 action areas that we identified. Having good action across those areas will allow us to have more efficient climate policies. We're not saying that governments shouldn't put a price on carbon and invest in energy efficiency, but what they should try to do is fix the contrary forces that are preventing them from being really more ambitious and more efficient in getting an impact through those policies. So the first one is planning. It sounds obvious. You need a plan if you want to drive a transformation and to drive a transition. Why is planning transformative? Because first, it's setting visions and objectives, and shared visions and objectives. Planning is a way to really gather stakeholders within a society towards a common goal and objective. Then planning, having good infrastructure plans, provides certainty for the private sector to get their investment flowing. And then it's a way of limiting stranded assets and communities. Indeed, without a plan, there's a huge risk that we invest in the bad type of infrastructure. This is a graph that was put together by the IEA in the latest edition of the World Energy Outlook. What does it show? It shows that currently the existing plans and under construction plans are eating almost all of the carbon budget that we have for a sustainable development scenarios, should they be used in the same way that they are used today. So if we just run up in a business as usual without investing anything else, we're already eating most of the carbon budget. It's really striking how much responsibility we have in the investment we're going to make in the next 5 to 10 years, should we want to reach Paris. The next 5 years will really determine whether we meet those goals or not. So what should governments do in the planning area? First, it's about planning infrastructure in the present, but with the long-term climate goals in mind. First step is to get a long-term vision, but what we realize is that only 10 out of 197 countries have developed those long-term low-emission strategies that were really praising by the Paris Agreement. And Resharper is going to talk a bit more about that after that. But the long-term is not enough. You also have to make sure that decisions making today is connected with a long-term vision. Some countries are really good at developing long-term visions, and it's often different countries that are really good at developing pipelines of infrastructure to give investors certainty. So aligning short-term, mid-term, and long-term goals is absolutely critical should we want to achieve this transition. The second thing is to make resilient infrastructure the norm and not the exception. Recent World Bank analysis shown that should we rebuild the Caribbean in the right way, mainstreaming climate impacts in the decision-making process, we could save up to 173 billion per year in terms of avoided damages and avoided economic losses. And the third action, transformative action that we identified, is about strategic foresight. It's good to have a plan, but it's even better and as important to be able to review the plan, to make sure that it's still the right plan. We live in societies where there are huge changes in socioeconomic factors, changing diets, urbanization, demographics, but also new technologies and innovation that are changing the drivers of demand for infrastructure. So we believe that countries should create capacities to really try to anticipate potential plausible futures and make sure that their decisions today are stress tested against those sets of futures. It drives me to the second transformative area, and it's about innovation. So yes, we need innovation. We need innovation. First, we need to deepen the diffusion and development of current set of technologies. If we look at all the climate modeling exercises that have been undertaken, there is no climate model that achieves the Paris goal without increased energy efficiency in buildings, without electric cars, without carbon capture and storage. And those technologies are not on track today. The IEA is telling us that only 4 out of 38 technologies are on track for market penetration. But beyond existing technologies, we also need to push the next frontier. Why is that? The OECD recently released a report on material usage and showed that by 2060, we can double the need of materials usage if we don't use circular economy models. And it would mean that actually the emissions that would come from material extraction and processes would represent 21% of greenhouse gases emission by 2060. So harnessing the power of new circular economy models that are often underpinned by digitalization and the new opportunities that is creating is absolutely crucial. We can open new pathways that would be cheaper and easier to achieve should we drive this innovation. So what governments should do to harness this innovation? The first one is about having the right policy frameworks for innovation, with having the right incentives, and also using public procurement to drive this innovation. There's a very interesting work from Mariana Mazzucato on the role of mission-oriented institutions to really drive this transition in the technologies that would be the new frontier. The second element is around research and development, public and private. We estimate that public research and development investment should double should we meet the Paris Agreement's goal. The third one is about overcoming the financial barriers that are linked to innovations through the famous Valley of Death on demonstration, deployment, and early stages commercializations. Public sector here have a key role to play to do that. And the last one, but not least, is about promoting international technology diffusion and adoption at scale. There's a huge risk that technology and innovation would increase inequalities because it would benefit only the countries that can afford investing in research and deployment. And this would be a huge mistake because there will be no low carbon growth if it's not a more inclusive growth, and that benefits all. So let's make sure that innovation is shared across countries. The third element in transformative areas is around public spending and budgets. We know that budget processes have a huge influence over behaviors and over investors' behaviors. So what governments decide to put a price on, to tax, to finance, or to subsidize have a huge impact on the demand for goods and for infrastructure. But it's not the only facet of this budget, the importance of budgeting. What we face also a huge contradiction, which is that governments want to engage in the low carbon transition, but when we look at governments' budgets, we realize that there's still a huge dependence on revenues from fossil fuels. And this put long-term fiscal sustainability at risk. At the OECD and G20, there is around 8% of governments' revenues that are linked to fossil fuel revenues. So governments need to really think about the long-term implication of going low carbon. So what are the action areas? The first one is about diversifying governments' revenue streams through finding new models of development and new sources of growth. The second is about aligning fiscal incentive with climate objectives. This is the famous carbon price. This is the famous removing fossil fuel subsidy support. But when we look at the numbers, I mean, this message has been across for years. When we look at the numbers, fossil fuel subsidies still represent between $300 and $600 billion per year. And if we look at carbon pricing, even if we have more than 45 countries that implemented carbon prices policies, we still have 80% of the emissions that are priced at a price below $30 per ton of carbon, a price that would make a difference. The third one on budgeting is about leveraging public procurement. It represents 12% of GDP. So governments are really market makers. Should they mainstream climate, low emission and resiliency criteria in their public procurement processes, they could really push the frontier for the low carbon transition. And the last one is about ensuring an inclusive transition along the way. We've seen that, we saw the events in France in the last few days. It's really about trying to leverage public investment to make sure that there is a better acceptance in population and to overcome political economy challenges. Carbon revenues represent a source of revenues and could really help drive this transition and drive public acceptance. I'm going to go more quickly through the three other transformative areas, but an essential one is actually finance system and private sector finance. It's obvious that public budget will not have enough resources to invest and to fill this infrastructure gap. So we need to leverage all sources of finance from institutional investors, from national, local banks. And what is increasingly true as well is that climate change and climate damages is putting financial stability as a risk. So it's a necessity to shift the financial system for climate, but also addressing climate change starts to be an increasing necessity for the financial system. So how could we drive the transformation? There's a momentum today, and there are a lot of initiatives that are really transformative, such as the G20 task force on disclosure, climate disclosure, or things that are happening at the level of the European Union. But when we look at really the allocation of money and of investment, it's still disproportionately going to brown projects. There's more than 53% of the investment that is still going to fossil fuel supply. So how can we change that? The first leverage is about helping private sector mainstreaming climate considerations in investment decisions. And here it's about data. Improving the transparency regarding the performance of low emission assets is fundamental, and helping really investors monitoring also the impact of their investment on climate goals. The second transformative area is encouraging the disclosure of climate-related risks and opportunities. And here, developing climate scenarios analysis by the private sector is actually a really transformative way of not having just a picture today of what is a climate risk, but what will be the risk of climate on investors' decisions in the future. And the last one is around rethinking financial supervision in light of the direct links that exist between long-term financial stability and climate change effects. The last two areas, so the one before last is around development finance. Many of the areas I've identified apply particularly to developing country context, but developing countries context have a specific needs and face specific challenges related to migrations, or the fact that climate change could put more than 100 million more people in poverty, according to the World Bank study. So how development finance can be transformative? Through financing, of course, but it represents a drop in the ocean of the finance that is available out there. It's also and mainly through mobilizing commercial finance for infrastructure in developing economies, and to supporting really the transformation through capacity building and political support. The challenge is that when we look at development, the mandates of those development banks, they don't mention climate, and there are still too many incentives in those development finance institutions that are going against working towards having an impact with the investment. They're mainly based on disbursement factors. So changing the mandate can really be transformational. Then the second transformative area is really pushing the banks to work towards the mobilization of new investors and new sources of finance, and particularly the national and local commercial banks. Blended finance instruments here have a real transformative power. And the last one is about using concessional finance to enable development finance institutions and drive the transformation. The last one is about cities, but I have my colleague Dorothée Allain-Dupré that is going to come just after, and she's going to really show us why actually local governments are absolutely instrumental in this transition. So I'm going to move quickly through the slides. Just a last thought. So, as Rodolfo said, there are 100 or different manners to attack and to drive the low carbon transition. We identified 20 because we think those 20 will make the difference in the next few years to really drive the transformation needed. But this will not happen if in each of those 20 areas we're not mainstreaming inclusiveness. The transformation needs to be about bringing a better life for people. The climate agenda at the end of the day is to ensure well-being for all populations. So making sure that the impact of all those policies on population is taken on board, and is mitigated will really be instrumental in driving this transition and has to be in the mind of policymakers along the way. Then last thing, I'd like to invite you. We'll be at COP next week, and we're organizing a series of events, and we would be more than welcome to have you with us in those events on the 12th of December particularly. Thank you.
Thank you very much, Virginie. That was a very useful and very comprehensive review of the key messages from the report. I'd now like to, without further ado, turn to our discussants who can kick off discussion. And just a reminder for those of you online, please don't hesitate to send us your questions in. A few have started to flow in already, but we're eagerly awaiting more. So, Dorothée, why don't you tell us about cities?
Thank you very much. I'm very pleased to participate in this webinar. And as Virginie just mentioned, indeed, the Climate Future Initiative identifies cities and local government as one of the 6 game changers for transformation. So let me briefly present what is in the report in the city chapter. And there is also a full case study which was also launched in the San Francisco Climate Action Summit in September. So we know it very well. Cities are key actors to the transition to a low-carbon economy. I won't repeat all the figures that are well known, but cities are responsible for 70% of greenhouse gases globally. In most countries, cities are in charge of the key responsibilities related to environment and climate, such as spatial planning, zoning, waste management, water networks, urban transport, etc. They are already key actors in financing and implementing climate action. But what is the scale of this engagement? In this case study for the project, we have really tried to measure in a more accurate way. It's very difficult because the data is very limited to track subnational climate finance in general. But we have relied on the subnational finance database of the OECD, and we went through the detailed functional categories of the national accounts in all the areas that matter the most for climate and environment. And we have been able to track climate-related spending and investment in a sample of 30 countries for the period of 2000-2016. So I just would like to highlight a few findings. The results show that, it's not a surprise, but the majority of environmental and climate-related spending comes from subnational government. It's 55% on average in the sample of 30 countries. Now, when we focus on investments specifically, this is even higher. This is 2/3 of investment related to environment and climate areas that is done by subnational government. But this is the third finding. When we look at the share of this spending in GDP, this is very low. This is 1.3% over the same period, 2000-2016. So this is very low when we consider the scale of the challenge that we face. And even more worrying when we look at the trends since 2000, this percentage did not change much over time. So it means that progress is super slow. So a lot remains to be done for subnational government cities to fully contribute to the radical transformation that is at stake. So in the report, we provide concrete recommendations for both national government and subnational government. For national government, Virginie already mentioned some of the fact, but with the link to cities, I just would like to mention two examples. So the fact that national government should reduce barriers to cities' ability to access finance, for example, with respect to the capacity to raise their own revenues or to borrow. In many countries, they cannot borrow. National government also have a critical role to play to put the incentives in place to foster horizontal coordination across jurisdictions. And this is crucial for infrastructure investment, in particular in metropolitan areas. But of course, some national governments have a decisive role as well. They have a number of governance and financial tools that can really make a difference. So for example, their existing sources of revenues, they can be designed and adjusted to create funding sources specific to low carbon climate priorities. They can use tools such as value capture tax, fees and charge, congestion charge, etc., to be more aligned with climate. But of course, and it was mentioned, we know that direct traditional sources of revenues will not be sufficient. Some national government also need to seek external financing for climate finance. So it means accessing credit markets through green bonds, attracting private investors through tools like green equity funds, PPP, etc. That's very easy to say. That's very difficult in practice. We need to keep in mind that most cities in developing countries, for example, do not have access to borrowing and even less to local capital markets. So the first priority is really to improve the credit worthiness of cities and to establish the right borrowing framework to unlock private finance. But there are some positive signs, such as the fact that cities and regions, in fact, are increasingly active in the market. They account for 13% of green bonds issued in 2016, for example. So the potential in this area is huge, but it should not mask all the other efforts that need to be made to green subnational budget. For example, greening priorities in budgeting and procurement. So in other words, it's really about mainstreaming climate priorities in all budget items for all purchase of goods, services and public works at the subnational level. A very quick final point is that cities and regions are also well placed to help link the climate and inclusive growth agenda. So we know that climate change exacerbates the effects of inequalities in cities. Some cities are already incorporating an explicit equity dimension into their climate change strategy, as was shown by a recent OECD survey. So in terms of financial tools, cities and regions can, for example, invest revenues from environmental taxes and fees in measures that also boost inclusive growth or make greater use of land value capture tools to support climate and inclusive growth objectives. So just to conclude, OECD data really confirm that cities and regions are key actors in the transition. It also highlights that considerable efforts is needed. Cities and regions also need to better monitor progress, and for that they need more data, better statistics. So the OECD is committed to continue providing comparative data on subnational climate finance and better track the implementation of the Paris Agreement at the local level. Thank you very much.
Thank you very much, Dorothée, and it's certainly underscored the fact that cities are going to be one of the driving forces as we become more and more urbanized for the rest of the century. speaking of the rest of the century, Resharper, you have a focus in your 2050 Pathways platform on this longer term issue. What can you share with us?
Well, first of all, thank you for the opportunity to discuss long-term strategies in the context of this important work on financing climate futures. A quick word on the 2050 Pathways platform. Our objective is indeed to support countries in the elaboration of robust, inclusive, and ambitious long-term strategies. In brief, the long-term strategies were introduced in the Paris Agreement in Article 419 to keep the ambition alive by aligning countries' efforts with the agreement over the long term of the Paris Agreement, and that is to achieve the balance between sources and sinks by the middle of the century. But first, the long-term strategies are becoming an essential tool to clarify the direction of travel that we talked about for individual countries and for their infrastructure choices. First of all, the long-term strategy exercise can open the scope for ambition. A lot more can happen in 3 to 4 decades than is possible to envision in 10 years, and especially in rapidly growing economies. The strategies also allow for a much sharper look at risks and opportunities. The risk for an open economy that relies on carbon-intensive exports for much of its growth into the long term, but also the opportunities for innovation and more structural changes that can be encouraged over that time frame. But most of all, they could be a robust framework for planning on energy, on other infrastructure, on land use, and much more. And they can point also to near-term infrastructure investments that should be promoted or avoided to keep countries on track. So where are we globally with the long-term strategies? You may have seen that the European Commission and France in the last couple of days came out with 2 strategies over the long term that both point to carbon neutrality, which is most welcome. So far, as you've said, only 10 countries have put forward LTS to the UNFCCC, and you've got a range from USA, Canada, and Mexico 2 years ago to most recently the Republic of Marshall Islands. I should point out, however, that many more are on the way: China, India, Japan, South Africa, amongst others. So there will be a lot more weight and a lot more visibility as to where the long term is going to be. And the European Union is also moving forward, as I just mentioned. There are 3 broad kinds of long-term strategies on the table today. The first one is a quantified exploration of future emission levels, model-based, looking at different technology options and their potential. The US and Canada, early ones, the Czech Republic look like this. Other ones are more the results of a bottom-up consultative process, lots of stakeholders engaged, produce a vision that is not necessarily quantified, but indicates a direction of travel, not necessarily a final goal. And the third might be a vision or a pathway exercise where the country has decided to go carbon neutral and is trying to pave the way very precisely, a pathway that will show exactly how to get there, what investments are necessary. You could look at those as a continuum or a combination, if you will. Now, how do we see the long-term strategies help guide the infrastructure choices? First, I think we should acknowledge it's early days. Very much of the focus remains on NDCs in a number of countries. We also have to account for the fact that any long-term vision will take time to become a set of policy frameworks and signals. But I should say it's not always clear that the strategies today provide the right level of granularity. You may have an aggregate view on transport, on mobility that needs to be decarbonized, but very few signals on what urban choices you might want for the country. You may have a decarbonized electricity outlook to 2050 with limited insights as to whether we're going for centralized systems or a decentralized system. At the same time, we start seeing clear do's and don'ts with those strategies. We shouldn't ignore that if a country says they want to decarbonize in the next 3 to 4 decades, new coal is not on. If they want to achieve this, mobility has to be decarbonized. There's several options for that, but at least those messages are clear and they lead to investment signals for the near terms. Now, we are getting very encouraging signals with the development finance institutions that are getting increasingly interested in the elaboration of long-term strategies as means to create in-country capacity on climate policy planning, as a means to empower countries with long-term plans that can become the new basis for the shorter-term country lending plans and discussions that they have with development banks. And we've seen also at the One Planet Summit that the International Development Finance Club and the NDBs signed up to align their activities with Paris Agreement and as such, they want to be much better positioned as client countries themselves to reorient their infrastructure choices. So those banks are asking their client countries to invest in those long-term strategies so that they can have a more clarified discussion over near-term investments. So in closing, we are at an important point where the ministries of finance, the development banks need to invest this space in order to raise the domestic profile of these strategies as guides to more structural policies that are of importance to the usual interlocutors of development banks and go beyond the usual environment policy. And secondly, to facilitate the translation from the long-term trajectories to near-term choices, including on infrastructure investment. I think this is really how the long-term plans can ensure that we stay on track. Thank you.
Thank you very much, Richard, and that certainly does reinforce the first of our 6 transformative areas around planning and the need to have a long-term vision and a long-term strategy to inform our short to medium-term policy objectives. So before starting to take questions from the floor and online, I'd just like to remind everyone that while we're at the OECD and we have an OECD strong panel here, this is a joint report, a joint effort between the OECD, the World Bank and UN Environment, and we really would like to take the opportunity to thank our colleagues in the UN Environment and in the World Bank for the great collaboration and cooperation in the preparation of this report. I'd also like to take the opportunity to acknowledge and thank the German Federal Ministry for the Environment, Nature Conservation and Nuclear Safety, who provided financial support for this project as well. So we ran a little bit longer than we expected to on our presentations, but we still have plenty of time for discussion. So before turning to our online questions, I'll give the opportunity for someone in the auditorium here. I better put my glasses back on so I can see. Who's got a burning question who would like to kick off the discussion? Oh, one down the front. Isabel, please, if you could identify yourself and then a question either general to the panel or to a specific person.
Yeah, a general question. Yeah, my name is Isabel Seeger. I'm also with the OECD Environment Directorate. And we just heard about the importance of cities and regions. And I was just wondering how you, the OECD and your partners, are planning to work with this new type of stakeholder, because, well, traditionally the OECD work, of course, rather focuses on governments and not so much on cities and regions. But well, considering the task at hand, I guess that is something that will happen in the future. So I'm just curious about how that will go. Thank you.
Excellent question, Isabel. I think that one is really for you, Dorothée. About the mayors.
Thank you for the question. I think the OECD indeed is focusing a lot more on cities and regions now than 10 years ago, and the OECD has already put in place a number of initiatives to really better involve subnational government in the analysis that is done. So, for example, the Champion Mayors is a network that was created a few years ago that now gathers more than 50 mayors of the largest cities in the world to work together on inclusive growth, on climate issues, etc. We also have created an observatory on subnational government finance and investment that focuses specifically on these issues of subnational finance in general, but in this context we also work on climate issues. So this is really a top priority, I think, and we have a number of networks to support that across the OECD.
Thank you. And just to add to that, at the OECD, at the broader OECD level, we do have a platform of local government networks that we engage with on an annual basis. And the environment, I know at the last of these platform gatherings the environment was a major focus of discussion. We do have a few questions online. I'd like to pick up a few that are particularly pertinent. And the first I'm going to direct to Virginie, but any of our other panelists can jump in as well. This is specifically how does the OECD help civil society drive responsible investment? Virginie.
Thank you, Anthony. Maybe as a bit of background, the OECD's first client are governments. So we're helping governments drive civil society into responsible investment. We have different levers to do that. The first one is a kind of a soft level. We had a horizontal project at the OECD over the past few years, and many of them were including a responsible dimension in the framing of the work of the organization. I'm thinking about green growth. That was one of the big flagship projects of the OECD 3 or 4 years ago. And now we are really focusing on inclusive growth because it's one of the challenges of the century. So those kind of framing are really driving the agenda of all the directorates within the OECD. If I think in more practical tools and instruments, the Directorate of Financial Affairs is very active in trying to provide governments with tools to drive those responsible business, responsible investment through, in particular, a tool called the Policy Framework for Investment. That is really a very comprehensive set of policy recommendations for governments to drive investment. And in the last update of the Policy Framework for Investment, there have been a few chapters that were dedicated directly to responsible business conduct, but also green investment. So it's starting to be a really mainstream part of the recommendations from the Directorate of Financial Affairs. And the third thing I would like to mention as well is an initiative that we started 4 years ago, I believe, and it's the Green Investment, the Green Center for Finance and Investment. That is, again, an horizontal project within the OECD across directorates of environment and finance and development that is really aiming at putting together the stakeholders of this responsible investment agenda and drive their action in the low carbon transformation. But what is very important on this topic of responsible investment, we're trying to break silos at the OECD because we think that's what governments in front of us should do as well to really drive this agenda.
Thank you, Virginie. We had another interesting question online which reminded us that the Paris Agreement is not the only game in town in terms of big international agreements. We had the 2030 Agenda just a few years ago where we had 17 Sustainable Development Goals, one of which was climate, but when you think about the other 16 goals, they all have aspects of environment and climate in them. How is our work in the OECD linking up these our climate work with these SDGs? And I think I might pass it on to you, Rodolfo.
Yes. Okay, thank you, Anthony. Well, this report is regarding many of the SDGs because, for example, in the first goal, Article 1, we have this goal of reducing the vulnerability of many of our cities, but also to avoid the death and missing persons and persons affected by disasters. So we need, in order to avoid those deaths and missing persons, to have a resilient infrastructure in our cities. So that's what about the report. But also in Goal 9, we have this build resilient infrastructure goal and promote inclusive and sustainable industrializations and foster innovation. And one of the indicators is to reduce CO2 emissions and to calculate the value added of those reductions. In Goal 11, for example, we have to make cities and human settlements safe, resilient, and sustainable. So it's another linkage with this report. And in the goal, I'm going to talk now about the mitigation and not only adaptation. In Goal 7, we have to provide affordable and clean energy. And it's also about low carbon infrastructure. In Goal 14 and 15, we are addressing oceans and biodiversity loss And it is part also of the strategies that we are promoting to protect our natural assets.
Thank you, Rodolfo. I'll now turn to the auditorium here. Are there any other questions that people would like to ask? Down the front here on the right.
Thank you very much for an excellent set of presentations. My question is actually for Dorothée. I was intrigued, Dorothée, by one of the points that you made about the lack of data at the local level. And it seems to me that this goes to a broader problem around capacity. And so I was just curious if you had any thoughts about what role the OECD, but other institutions or national governments could play in that regards to address what is a data gap, which is essential for tracking progress towards the Paris Agreement. Thank you.
Thank you. Well, I think there is a data gap at the subnational level, but also at the national level. It's not only at the subnational level, but it's true that the challenge is more important there. And I think there are many reasons for that. Clearly a question of capacity sometimes in some subnational government, but also the fact, for example, the way the national accounts have been designed. I mean, the different functional subsectors of the national accounts are not were not designed in line with the climate objectives, of course. So it means that tracking, when we want to really track the spending and the investment very precisely, is very difficult. So that's why we have proposed in this report a pilot methodology that we would like now to expand, to consolidate, and that's why we really intend to continue this work. This was a pilot initiative, but the results were very interesting.
Thank you, Dorothée. We've got another question online, which is, I think I might direct to Richard. And this is about, to paraphrase the question, it's saying, all very well to have long-term pathways. They often involve a lot of modelling, a lot of foresight, which requires a lot of capacity, a lot of modelling. How can developing countries, and particularly smaller, the smaller developing countries, how can they take part in this when they have the capacity, and how are we going about building the capacity to do that?
It's clear there are different priorities for different types of players. I'd just like to mention that there are examples among those who've tabled strategies of super small economies, super vulnerable, that you may not would think about the long term, but the Marshall Islands, for instance, a country of 70,000 people, has actually delivered a fairly ambitious strategy, and one that also connects the long term with the short term decision making. So an example that can be followed. I think we have to really also keep our eyes on those who can actually think further ahead, but also for the development banks to help build that capacity. This may not be done between now and 2020, which is when we are calling for those long-term strategies to be developed. But I think the development banks are increasingly going to encourage the countries that are most vulnerable to actually develop that capacity, develop those plans, and think about their infrastructures now to be on track with the long term. And that may not, by the way, necessitate a full-blown strategy. That might necessitate to make the clear choices in the near term. I mentioned decarbonization of power generation, infrastructure for urban choices, and so on and so forth. The strategy, in other words, might be a vision. I think the quantification might be for some countries. Other countries may actually go ahead with, clear infrastructure choices that do not require that sort of elaboration.
Thank you, Richard. I'm looking out at our audience for waving hands. There's one here. Manolo, yes, please.
Thank you. It's a very important piece of work, and it gives an outlook on recommendations that governments may take. But to bring this to a reality and to really make it transformative and really create the revolution that we need in our countries, what additional steps will these three, the three organizations are thinking of taking to make this a reality. And let me give you an example. Would we be able to bring this type of recommendations to, let's say, a recommendation from the Council of the OECD to make it to have the EDRCs make a specific reference to all these aspects. So whenever we have an EDRC of a country, that we can take a look at how they are really implementing all these issues. The same would go, for example, for the World Bank. I know that UN Environment is, of course, they have their core work is environment, but the World Bank, on the recommendations that you can bring for specific areas that are not environment, would you also be willing, or how can you bring these outcomes or these findings into specific recommendations that other areas of government can take into consideration?
Thank you very much, and that's a really good question. I might actually have a first crack at answering it. We can only speak on behalf of the OECD because the World Bank and UN Environment aren't here, so wouldn't want to speak on their behalf. But certainly in the OECD, there's been a lot of work done in the last 5 to 6 years, even a little longer than that, to mainstream climate and environment issues in the work of the other parts of the OECD. For example, in the economic policy reviews that are conducted every 2 years of all OECD countries plus key partners plus selected other countries, there is a focus on green growth, and there is a set of environmental indicators that are part of every review. And issues around infrastructure, around water, around waste, around chemicals management, all find their way into the reviews of how these environmental dimensions will impact on the economic growth and the economic prospects of the reviewed countries. So we are mainstreaming it in that regard. We have a OECD Centre for Green Finance and Investment, which is jointly run by the Directorate on Financial and Enterprise Affairs and the Directorate for the Environment and the Centre for Tax Policy and the Development Cooperation Directorate and the Centre for and with another few directorates as well. So we are mainstreaming it. The question you ask about raising the kinds of recommendations from this report to a more formal level with recommendations and like, that's a question for member countries and the appetite to introduce new multilateral instruments into the OECD acquis. As many of you will know, the environment accounts for the lion's share of OECD Council recommendations and decisions. We already have a very rich environmental acquis, which we are reviewing and always updating and enhancing. So, Manolo, I would encourage you to discuss with your colleagues in the delegations how we can push this forward into stronger and more significant recommendations in the OECD. I don't know if any other panelist wants to touch that one. Rodolfo.
Perhaps one of the most interesting suggestions here is this policy area to reset the financial system. I think that like in our homes, when you receive the Wi-Fi and it's not working very well, you need to reset the modem and try to get the velocity as you are requiring. In this case, we need to have a long-term vision. We need to have these plans that Virginie mentioned, and the complete financial system must be reset in order to do this disclosure of risk associated with climate. We also have to have in our countries a climate impact assessment, as we are having an environmental impact assessment or a strategic environmental assessment, we have to have a climate risk assessment in order to approve a project. Now we are, for example, financing in our countries fossil fuels power plants, and those are increasing the risk in our planet to reach higher temperatures. So it is needed to do these risk assessments in order to avoid investments that are not contributing to the solution of this problem, are also increasing the problem. So there are many policy areas that are quite relevant, but in my opinion, resetting the financial system is the key one.
Thank you. We have actually run over time a little, but I'd like to pick up two really interesting questions about the same topic that have come through online. One from Guy Brindley and one from Joachim Lokasu. And these relate to education. And both these questions ask, given the barriers that we have identified in this report and the solutions we are proposing, isn't there a bigger question around educating communities and societies, both in the developed and the developing countries, about how about the dangers of climate change, the risks of climate change, and the solutions? They're asking, should we be funding education campaigns? Should this be a priority? So I might ask the whole panel their thoughts on this, and then we will leave that and then close up the webinar. So who'd like to tackle that first? Richard.
Maybe a bit of an anecdote, but we're working with a country that has worked on its climate plan. It's a fairly technocratic instrument, as you can imagine, lots of numbers and graphs. But the question was soon asked, what do we do with this? How do we make this accessible to people so that they understand what their contribution might be to it? And this is the sort of activity we want to develop, that is to provide with this long-term direction, this direction of travel that the country has established for its society, and how to guide for how citizens can actually take this forward. Whether that becomes then school books, that's another question, but at least there is some work that has to be done to make sure that this is not just a discussion among governments, but one where citizens can take back control and take matters into their own hand to manage this transition as well.
Just a quick word. I think first there has been a considerable improvement in recent years, and the younger generation is much more sensitive to the question than probably older generations. So I think we should first acknowledge the progress, and then to the question, should we finance campaign? Or, of course, I mean, this is a priority, but it's more important that it should be at the core of school programs since at a very young age, and it should be really at the core of education. So my answer is definitely yes.
Yes, in order to build resilient cities, low carbon infrastructure in our cities, we need to involve the population. And we are recommended to rethink institutional configurations. And we need to convince the people that it is needed a new set of institutions, climate institutions, that will promote this new sustainable development activity. And for sure, education is part of this plan of having institutions really mainstreaming the climate issues. So that's very important.
Just a final thought. Yes, education is central to the climate agenda, being to just influence behaviors. But there's one point I would like to flag, and it's linked to a much broader problem of the future of jobs. Because when we think about the climate transition, it means that there are many jobs that will disappear in the future that are linked particularly to fossil fuel productions. And the question is, are we providing the current students with a set of skills that will be the one necessary for a future that is more connected to services, that is a digitalized future where artificial intelligence may have taken a bit of the jobs that are existing. So it's a bit linked to the recommendation we have on strategic foresight. It's really linking the climate agenda to the bigger picture of what are the signals that we can read today in our societies and that can really bring huge transformations in the future.
So the broad answer is yes, education is central to the way in which we bring societies and communities along in this low emission resilient future. That is all the time we have for our webinar today. I'd like to take the opportunity to thank our panelists, Virginie, Rodolfo, Dorothée and Resharper, and if we could give them all a hand, that would be much appreciated. I would also like to take the opportunity to thank once again our partners in the World Bank and in UN Environment for their cooperation and in preparing this report, and also to our supporters in the German Ministry for Environment, Nature Conservation and Nuclear Safety. I'd also remind everyone, both here and online, that we will be at COP, and you can find more details about the events where we'll be presenting this report in more detail on the website, which is still on the screen there. So without further ado, thank you very much. Thank you also to our technicians and to Beth and Douglas and Christina and
Kate.
Kate and our technicians for making sure that this webinar happens. Thank you very much and look forward to the next Green Talk Live in 2019. Thank you.
And Zoe.
Thank you.